Hello, everyone, and welcome to the Metaverse, Third Academy Metaverse. And here we are, Crypto Equalizers. I am Crypto Rican Queen, and my partner here is,
Money Talks Crypto.
and we want to bring as many people into the crypto space, and that's one of our missions to bring other minorities and females into the space because there's not that many of us in here. And we're passionate about all things crypto. And again, I want to reiterate that we want to thank Third Academy for inviting us to this amazing metaverse and hosting us every other week because we want to share our knowledge and experience with you. And we're going to talk about the wonderful topic of taxes. And I'm being facetious because it's not a wonderful topic. But if we can help you pay less taxes after making money with crypto, I think that will be a great topic, right? So please post
Absolutely.
questions wherever you are watching us in YouTube, and I don't know if we're anywhere else. Thank you everybody for watching us from wherever you are. Whether you're a beginner or an expert, I hope you find something valuable here. And let's get into the topic. Right, Money Talks.
Absolutely, you guys. We're here to really help you guys maximize your crypto experience and learn as much as you can while you still, navigating your journey. This is a wonderful, wonderful space, and it can open up many, many opportunities. But you have to have the right education and know how to maximize your gains and know what to do with them when you do have gains, especially now that we are all preparing for the next bull market.
Yes. And the reason that I wanted to talk about this is not only as preparation for the bull market, is that, I've been being vulnerable like I was vulnerable the last time, is that I made too much money last year. And so the IRS is hitting a big piece of my pie, and I'm not too happy about that. So I have to be like taking an account into how can I actually do what everybody else does, and I mean the top 1%, and so that I don't pay taxes or pay the least taxes legally. And let's emphasize that legally, right? Um, because if you guys don't know this, the tax code was made for investors, which is the reason why we are focusing on this in assets, right? Any asset. This actually not only is for crypto, it's also for forex and for stocks, right? So thank you for watching and listening. So there are a few ways to avoid paying taxes legally when buying assets like crypto, stocks, and forex. Of course, we have to say this. This is not financial advice. Please consult with your financial and tax advisor. The first thing that we need to focus is understanding capital gains tax laws. Specifically here, I mean, our context is the United States, but most countries tax capital gains, which include profits from the sale of investments like crypto, stocks, and forex. However, tax rates and exemptions can vary based on factors such as the duration of the investment. That's where we go into short-term and long-term capital gains or loss. Long-term investments often receive preferential tax treatment, meaning you pay lower taxes on gains from assets held for a certain period. That is why understanding these rules can help you minimize your tax liability legally. Again, legally. So basically, if you buy crypto and you're holding crypto for less than a year, it will be short term capital gains or loss. If you hold that crypto for 12 months or more, that means without selling or doing anything, not converting, or just holding it, then 12 months or more is considered long-term gains or capital gains, long-term capital gains or losses. You want to comment a little bit on that, Money Talks?
Absolutely. This is something that a lot of people don't understand, that the percentage is better. Long term is about 15%. and then short term, I think is about 35%. So it's a big difference. You're talking about anywhere from 15 to 20% just by holding it a little bit longer. And a lot of the people, what they tend to do, and this is something I personally do myself, is if you know you want to trade something specifically short term, they will have like a short term account. And then they will have a long term account, which is more like a retirement account or something that they're going to hold for longer. And they don't really care what happens with the asset because they know it's going to be long term. So, trying to find out what kind of investor you are and what asset you want to trade short term versus long term will definitely help you out to understand and better analyze these percentages and how to maximize those gains and profits.
Exactly, totally, Money Talks. And one of the things that I do, because I'm a trader, so I actually, for me, that most of the stuff is short term, and so whatever it is not short term is gonna go to my cold wallets. That's where my long term holdings are, so that I can actually have kind of like a depot, like a type of separation um, between those assets. The in the stock market, I'm trading for long term, but in crypto is where I'm doing more short term. So let's talk a little bit about tax loss harvesting. In some jurisdictions, you can offset capital gains by selling investments that are performing poorly, thereby realizing a loss. This loss can be used to offset gains on other investments, reducing your overall taxable income. This practice is known as tax loss harvesting and can be a legitimate strategy for managing your tax liability. The only problem that I see about tax harvesting is that tax loss harvesting is that they have like a limit, I think, of $3,000 in a year. So, example, let's say that you put 3,000 and you sell, and that your 3,000 went to $100 and you sold. Again, the people that do that is that they have so many assets that have made so much money is to basically pay less taxes legally. But the problem is there's a limit, right? So there's other ways to work around those limits. Money Talks, what do you think about this specific strategy?
Uh, if I believe correctly, it also rolls over. So let's say you lost
Yes.
$1,000 this year.
Hmm.
So that you can claim 3,000 this year, and then next year you can claim the extra 3,000. And there, for both years combined, you have covered those 6,000. But I want you guys to really pay attention to tax loss harvesting because this is what a lot of the wealthy do. If you guys remember, I think it was last year or the year before, at the end of December, you see a lot of big um, people like Elon Musk selling, even though they're losing. So they'll sell their stock options or whatever they have just to take advantage of this. And you got to remember that a lot of these people have companies within companies. So they'll have like different LLCs, and then within those
Hmm.
different LLCs, they do different reporting. So they do maximize how they take advantage of them because they have more companies to account for this. While some of them they do they'll like have different assets within the different LLCs, so like that they can take more advantage of this practice.
Exactly. Yes. The only thing is that with the tax loss harvest is that for a normal person, not somebody that has 1,000 LLCs. Um, yes, it rolls over, but then if you had new years of loss, right, it's going to, like example, somebody that had a 5,000 loss, right, last year. Yeah, you take 3,000. Now we got 2,000 for this year. Well, what about if this year that person had more loss, right? So it's like you're gonna keep pushing it to the future. So it has a limit, it actually, like Money Talks stated, it's more advantageous when you're dealing with an LLC or specifically I have more than an LLC. So we're going to move then to another thing, which is tax deferred accounts. Some countries offer a tax advantage accounts like IRAs, individual retirement accounts in the United States, or individual savings accounts in the United Kingdom. Contribution to these accounts may be tax deductible, and the investments within them can grow tax free until withdrawal, providing a legal way to reduce tax obligations. So, this is another way that you can actually take advantage of that. Also,
This, oh,
we have. Were you going to say something? Go ahead, Money Talks.
yes, because there's a lot about this.
Yes,
Also, this
ma'am.
is really good, especially like the Roth IRA and the IRAs when you're making more money. So let's say during the bull market, you made enough money and you want to withdraw it. Well, the money that you're getting paid, if you're an employee, you can maximize your IRA so that you pay less taxes for that years when it comes to your employer and your employee, right? So for that year, you're gonna max out your IRA, then you can max out your Roth IRA. And then a lot of people don't know, which now a lot more people are starting to do, is if you have a high deductible health plan, then you can also max out your health savings account. So if you are a person that you are an employee and you're also an investor, the way to offset those taxes that year is max out everything with your employer. And then if you want to withdraw money from the investments, that will balance off how much taxes you have to pay when you're reporting at the end of the year.
Mm-hmm. Exactly. Does anybody have any questions from within the metaverse or outside the metaverse?
Yes, I have a question. Um,
Yes, go ahead.
when you typically invest in stock market, let's say through Fidelity, and you buy through Fidelity or Vanguard or one of the trading platforms, at the end of the year, you get a statement from the company that tells you what you traded, and so you could more easily keep track and calculate short term, long term gains, losses, whatever. Um, do the crypto companies, or when you trade in crypto, are there similar paperwork provided by the companies you're trading with that calculates or tells you what you did during the year so you can calculate your taxes accurately?
It, it depends on the exchange. Usually, exchange has like any type. They like example, Coinbase has a tax reporting feature where you can see everything that you bought and everything that you sold because it's in the selling or conversion of one coin to another, which is a taxable event, or using crypto to buy something. So yeah, there's some of them do, some of them are better than others. I mean, Coinbase is pretty good. Others you have to basically get your transactions and then try to patch it together. Now I use a system with automated system called coin tracking, basically that I create APIs in all my exchanges because I have so many exchanges and so many wallets so that I can actually calculate. Because the problem with me specifically is that I use bots, and the bots last year made a million trades. So when you're dealing with trades of more than 100 trades in a year, and then moving money from here to there can actually get complicated. So this actually this automated software helps me a lot to keep up with what is happening because it can get complicated. Does that make sense?
Yeah, but one other question related to that. When the companies that do stock trading or other trading send you the forms, they also send it to the IRS. Does the company that you use, Coin Trading, whatever the name was, do they do the same thing, or are you just personally responsible for figuring out your taxes, and the government has no copy of what you're working with?
Yeah, they don't have a copy unless I send it to them. So, but the Once I have everything and I had to check missing transactions and look at the cost basis, basically how much money you pay for that, for that specific coin, then the system will create a report and tax forms that you send to the IRS. And that's, so I have a report, different reports, 30-page report. I have one that's 200-page report. So I give them, I don't want to make the IRS angry. So I just basically do the summary, um, because I have too many assets and too many transactions. But yeah, they don't actually report directly to the IRS like the stock market. No. Yeah.
So,
Well,
so
the IRS, here in the US, the IRS is going to start implementing that in 2026, where every broker is going to have to start showing this information to the IRS.
I see.
And now they have appointed to unpaid digital asset taxes as a contributor to the tax gap and the difference between the taxes owed and collected, which were more than 5 billion per year, and that came out this year from Bloomberg. So they are looking to for any U.S. based cryptocurrency exchange, such as Coinbase and Kraken, they will have to report the details, information on their clients' transactions to the IRS starting 2026 under the Treasury proposal.
So would
So
that mean, Money Talks, that we will not have to report it anymore, or still would we have to report it even though the exchanges are going to be reporting? That's the question. I'm sorry.
You still have to report it. So like for people that do their own taxes, when you're reporting anything crypto or anything with the stocks, you still have to upload the documents when you're doing that reporting.
Mm.
Even though they're gonna have it, you still do have to upload everything along with your forms.
so that means for the past several years and until 2026, the taxes depend on the honesty for trading, at least of the individual.
Hmm. Exactly. It does.
Absolutely.
Right.
Before you got to remember that before 2020 or 2021, I think it was 2021, crypto wasn't mentioned at all in the IRS. So anyone that had any profits prior to that, I'm not sure if it was 2020 or 2021, there was no kind of reporting on crypto. So you had a lot of people that benefit from that as well.
Wow. Wow. Also, one more question. Of long term, you have separate long term and short term holdings. Now, with the volatility in the crypto world, long time holdings seem like I wouldn't say a crazy idea, but it seems like a more difficult idea. It sounds good, but long term holdings with the volatility that exists sounds like a tough road to hoe.
Well, not really, Mike, because when you're holding, you're not really losing or gaining anything, right? Because it's when you sell that you cement a gain or loss, right? If you sell under where you bought, then you will lose. If you sell above where where you bought, then you win. So people that are actually just holding, they don't have to look at their stuff every day, um and after a year, you don't if you hold for 2 years, you're still going to pay the same amount um once you sell, right, than a year. So there's some people that think that they might, holding a year, holding 2 years, you'll pay less in 2 years than 1 year. No, it's the same depending on what is happening in the market at that time. But yeah, no, what is more difficult is when you're trading, because then you have to be paying attention to what is happening. So again, what are tax events? Converting one coin to another, selling a coin, buying with a coin. If you send crypto from one wallet to another, that's not a tax event. If you're holding, that's not a tax event. Hopefully that they don't change these things. So did that answer the question?
Yeah, it did, but from a psychological point of view, long-term holding it with when things are going up or down 50% or 30%, it's a little more nerve-wracking than in the stock market where typically it's 3%, 5%, 8% would be a huge swing a year.
Well,
Yeah, I mean, go ahead, Monitax.
it really depends on the asset, because there are assets in the stock market that have dropped a lot the last 2 years. Um, so that's something that when you look at Bloomberg and stuff like that, Bitcoin has actually been pretty stable after the bank crisis, now with the war, and actually Larry Fink, who is the one that manages BlackRock, just said that now with the war and all the uncertainty, people are actually running to crypto as opposed to stock in the treasuries, because the stock market hasn't been performing as well. If you look at the last few days, all of the big markets have been dropping as well. So it's really depend how you look at it. But for example, um, the predictions for Bitcoin is 1 million, and for Ethereum is 180 by 2030. When you look at it at 27,000, comparing to those prices, is relatively pretty cheap. When you look at stocks that are crypto related, for example, Riot and Marathon Digital, they were about $70 to $80 in the last bull market. Right now, they're like $7 or $8. When you look at those prices, they're relatively pretty cheap. And if you buy them now, you're gonna be looking about 10x profits, giving if they go back to their all-time highs of $70, $80. So it really depends on how you look at it. And something that I always tell people is pick a price that you think is good enough that you're willing to pay for, and then set limit buys surrounding those prices. So something I like to do is, let's say Bitcoin. I think anything below 20,000 is a good price. Right now it's probably a little bit on the higher end. We might see it go down a little bit more. So I like to set a limit price between 17,000 and 20,000. And then I'll just set a few bucks. If it triggers that price, then I'll watch it and then get more of it. Same thing with the stocks. You can do the same thing. Let's say you
Hmm.
want to buy Amazon at $120. You can go on any broker and say, buy me one Amazon at $120. If it triggers that price, you can go and watch it. And if it goes down further, you can go ahead and buy more. So to me, it's always a math game, and I like to play with the numbers, and always pay what I think is a good price, given the asset and knowing how much it can appreciate within the next bull market.
Exactly. Does that answer the question, Mike?
Yeah, it does. Good answer.
Yeah, and actually, for me specifically, I mean, I think it's because like again, you're not as connected as we are in the crypto space. We know that the halving is next year with Bitcoin, and everything is going to start going up. The longer we hold, if you want to, mostly sure everything is going to be at least double. So that's why a lot of people hold for a while, for a year or more, because they think it's safer, right? In a way, it is in the sense that you don't have to pay taxes. As long as you're holding, you don't pay taxes. That's another thing. So you can hold, right? And so, for example, like now there's companies that you can buy houses with crypto in different states. I don't know if you know that. So if I want to buy, example, a house, and I have $1 million portfolio, right? As an example, I don't have to sell the coin to buy the coin. I can tell the people, hey, I'll send you this amount for the house without having to incur a tax event. Because if I move coin from one place to another, right, I didn't sell. See what I mean? So
Yeah.
again, it's the knowledge, is knowing what to do what is happening in the market that basically gives you um, peace of mind. Because the example, I had a lot of limit orders in stock. I noticed that my stocks were down. I'm like, I'm gonna get some more of those shares. I wasn't like, oh my god, my stock went down. No, I'm like, I want to get more because it's really really cheap right now, right? So it's how you see it. It's what you do, that how you apply it and what you see.
Great. Thanks.
Can you explain halving?
Oh my gosh. That's a good question. That's a really, really good question. Basically, um, Bitcoin is supported by a network of computers. And every year, a specific year, you can actually mine a several amount of Bitcoins because there's only going to be 21 million Bitcoins. So next year, that reward for the miners is going to half. Basically, it's going to be half of what you can do now. Let me see, and I think it was. Let me see. How much was right now? How much can miners? I always forget. Miners of Bitcoin.
I believe right now it's 650 and it's gonna have to 325.
Yeah.
So
Yes, that's true. Yeah.
essentially the halving happens every 4 years, about every 4 years. It really depends on the um the amount, so it varies a little bit. It's not 4 years to the exact date, but it's about
Mm.
4 years. And what happens is the reward that they get paid for mining that Bitcoin is literally cut in half. So in the beginning, when people were mining, every time they would complete one, right, they would get about 50 Bitcoin,
Mm.
which was a huge reward. Thinking about the price that Bitcoin is today, but right now they only earn about 6.5, and after this year it will be 3 point. After April 2024, about it will be 3.25.
So
Okay.
usually it raises the price of Bitcoin is what happens, and then the whole market goes up. So that's what we're expecting next year. That's why we're like, yay! It actually lowers. Again, there's only going to be 21 billion Bitcoins, 21 million, sorry, Bitcoins ever. And how many are lost, Money Talks? A lot of them are lost, by the way.
This is one that
People,
I really like to play the math game with because to me it's all a math game, right? So technically there's 21 million, but when you do the math, there's only about
mm,
8,000 that you can actually buy. The reason why, because 18.5 have been lost because people cannot remember or recover their keys, or the computer or the device that they were storing it in have been lost. Then 1.7 has yet to be mined. So when you do the math, there's only about 800,000 in circulation that you can actually buy and move around.
which for Bitcoin holders is ultra important because it brings scarcity. Um, the less of these things around, the price of Bitcoin is going to go. Like they say, they're predicting that Bitcoin is going to be $1 million. I mean, that's the difference between what our government is doing with printing money at will and scarcity of a asset. Because Bitcoin is actually more scarce than gold, more expensive than gold, and more scarce than gold. And so that's why we have so many Bitcoin maxis in the space. Did that answer the question about the halving?
Yes, thank you.
And this is
No
why the
problem.
habit is such an important event for the community because it always triggers the next bull market. So a lot of the big companies that are involved with mining and things like that, and just within the brokers themselves, now they're starting to prepare for the next halving. So that's something that you're going to hear a lot within the institutions about the crypto companies starting to prepare for that bull market. Because if you guys have never experienced one, exchanges go down, people are unable to transact, a lot of things happen because the fluctuation in price and also the amount of users within these platforms at one time. A lot of the bull markets is what bring a lot of the newcomers to crypto. And when this happens, you're gonna see a lot of these apps like reporting that they're down. It has happened to Coinbase many times. So I really hope that they're now preparing their manpower for that.
Well, we know that it's not because Uphold, when the whole thing with XRP happened a couple of months ago, nobody could go into Uphold because a lot of people wanted to sell their XRP. And so they were down for like a day. I think it was more than a day. This is the reason why we talk so much about having limit orders set for buying and selling and not having all your assets in an exchange because that's what can happen with, you know, and either when the market goes down a lot or when the market goes up a lot. So let's go back. Let's talk a little bit about staying informed about document transactions because it's important to this to keep detailed records of all your investment transactions, including purchase dates, sale dates, amounts, and any associated costs. Be sure that you know how much you bought that coin at. For example, if you bought XRP at 50 cents, put that because that's a cost basis. Staying organized and documenting your investments can help you accurately report your capital gains and losses when filing taxes. Another thing is to seek professional advice. Tax laws are complex and can change. Consulting with a tax professional or financial advisor who specializes in investments, especially crypto, can help you navigate the complexities of tax codes, ensuring you comply with the law while optimizing your tax position. Okay. We also have other tax advantage accounts, but I'm not going to mention the 401k. Let's talk about the health savings accounts, 529 plans. Those are another way, like Money Talks was saying, to avoid paying taxes when buying assets. Take advantage of tax loss harvesting. This strategy involves selling assets that have lost value to offset capital gains. So another way of paying less taxes, like I said, hold your crypto for more than 1 year before selling it. This will allow you to qualify for the long-term capital gains tax rate, which is lower than the short-term capital gains tax rate. Consider using a tax advantage account to invest in crypto. Some exchanges now offer IRAs and other tax advantage accounts for crypto. Report your crypto transactions accurately on your tax return. In the stock area, the same thing. All your stocks for more than 1 year before selling them to qualify for the long-term capital tax rate. Okay. Going to now talk a little bit about trust, because that's another way that you can actually pay no taxes. Or so there's two things that I want to talk before we go: trust and buy, borrow, die. But I think I'm just going to mention trust very, very fast, which is basically a legal arrangement that allows you to transfer ownership of assets to a trustee who will manage the assets on behalf of the beneficiaries. Trust can be used for a variety of purposes, including reducing state taxes, protecting assets from creditors, and providing for minor children. There are many different types of trust, but the most common types for estate planning purposes are revocable living trust and irrevocable life insurance trust. One of the trusts that I was actually researching was a charity remainder trust. So you hear that a lot of the times Elon Musk and all these people are giving money to somebody. Oh, they donated. So a charity remainder trust is kind of like that. It's basically giving some of your assets, being stocks or crypto, to a trust that you create. The charity remainder trust can be a not-for-profit organization that you create yourself, or a not-for-profit organization like a church or anything that you want to support. So charity remainder, basically you that part of your portfolio there, create a trust, put that there, and give yourself an annuity to get some of that money, and then the remainder of that goes to the charity. And so that's why it's called a charity remainder trust. Has anybody heard about a remainder trust? I know Money Talks has, right?
And another thing that with the trust and the charity giving, you are able to give up to $15,000 each year tax free to any charity as well. And that's as an individual. So these are good things to start keeping in mind as you start exploring the different ways to continue to stay tax free. And also um, with the health savings, they call it a triple tax free account. The reason why, because when you're putting money into the tax savings account, it's tax free. When you use it to buy anything medical related, it's tax free. And then when you withdraw when you're older, it's also tax free. And with the health savings account, depending on the account, after X amount of money, you can also trade it in the stock exchange. So that's really good to know when it comes to the health savings account and for the charity, keeping in mind that $15,000 does apply to individuals as well.
Any questions, guys?
Good point.
Okay, cool, right? So
Yeah.
it's a boring subject, but when you're saving money, I think it makes it more exciting, right? Because yeah, again, nobody wants to get in trouble with the IRS, and nobody wants to lose all their money. So I want to talk about the last thing that I wanted to talk about, which is buy, borrow, and die. And this is the strategy that a lot of most of the wealthy people, top 1%, are using. It involves using life insurance or any type of other asset to reduce state taxes. And the strategy works as follows: you purchase a asset, being life insurance, a crypto, or stock. Name the trust as the beneficiary. You borrow money against the cash value of the asset to purchase assets. And when you die, that pays out the trust, which is used to pay off the loan and distribute the remaining assets to the heirs. So buy, borrow, and die can be a complex strategy and is important to consult with a qualified estate planning attorney. So basically, example, let's say that I have a $10,000 portfolio and I borrow 50% of that portfolio, 5,000, right? I can actually then buy more assets. I don't owe anything to the IRS because I am taking debt to make money. So that's another thing that a lot of people don't know. Is like, doesn't that sound great, Mike? What do you think? I mean, imagine you can take debt and make more money.
It sounds really good, except for the die part.
Well, we all have to die, but the point is, like, you don't have to pay taxes as long as you borrow against your asset, being stocks, being crypto, being your insurance, being real estate. Borrow, 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 borrow. This is why our country is focused on debt. It's just there's good debt and there's bad debt. So to take against your portfolio, being whatever your portfolio is, and against an asset, borrow against it, man. And to be able to make more money, that's like magic to me. I mean, seriously, crazy, right?
So
And this, go ahead.
sorry. So your advice for crypto sort of mimics the advice that investment advisors give for other asset classes as well. Is that
Basically,
the story?
Yep, exactly, man, exactly. Yes. Money talks. Do you want to say anything?
Yeah, so what people don't realize is that crypto is like the newest asset class. It is truly an asset class. When you start paying attention to Bloomberg, which watches the global economy, um, this is like one of the newest, fastest growing asset classes. And a lot of the rules that apply to your traditional finance assets are being applied to crypto. And this is why a lot of the community gets a little bit sensitive about that because it's a brand new technology, but the same regulations that are being applied to banking and to stocks are now are now they're trying to incorporate it into crypto. And it's like, yes, some of the same regulations might apply, but not everything because again, it's a brand new asset class. So this is why you see that a lot of the community doesn't really like when they talk about regulations because that's literally what they're doing. They're taking some of the existing banking regulations and putting it into crypto. When you look at things like KYC and know your customer and anti-money laundering laws and things like that. Um, but to that point, you will see that a lot of the analysts and strategists will apply the same course when it comes to crypto investments. Um, However, it is important to remember how new this asset class is and how much it can appreciate once it starts being adopted. One of the things that I always reiterate is that the world has 8.8 billion people right now. Only about 4% of the global population is involved with crypto or knows about crypto and owns the asset. When that number starts appreciating and you got 10%, 20%, 50%, you will see the appreciation of the assets as well. And you're gonna start seeing these numbers that they always predicting about 1 million Bitcoin, 180,000 ETH, etc. Because you're gonna have more people learning about these assets and using it and seeing how it works. So I think we're gonna have a Q&A session now. Do you guys have any other questions in regards to the topics that we have brought up today?
I have a question, and sorry if it was brought up, but I was just curious to know what the tax rate is. Is the tax rate the same as, let's say, income tax?
Is that related to the UK, I'm guessing?
I'm Australian, but I reside in the US.
Okay, so you're saying tax rate. I'm not quite sure. Do you know, Maddie?
Awesome.
I'm not sure
You,
if my audio's working.
muted.
So I know. I know that different countries
Sorry,
have
I was
different.
muted. I'm sorry. I was muted.
Yeah,
Okay,
let's focus on the US where I currently reside.
Yeah, so basically what I was trying to say is that with taxes in United States, it depends on your tax bracket.
Okay.
Single, if you're married, how much money you made and how much your asset appreciated on what you're going to pay. So for example, I had in my taxes, and which I just turned not that long ago, this past Monday, because I needed an extension. Um, they actually there was different taxes that I was paying. Some of the crypto that I made was income because I have a business. Some other stuff was considered an asset. It just depends on if it was short term and long term and all this other stuff. It's very complicated. It's I don't know if that answered your question, or maybe if you can rephrase your question, Jameson. Did I answer your question or not?
Yeah, I think so. I mean, the current income tax is, I think, between 10 and 32%. So I was just wondering
Mm-hmm.
whether it falls within that kind of percentage kind of frame.
Yeah, it's usually I think short term is 20 to 40% for short term capital gain. I think it's 20 for
it's ten
20.
to it's 10 to 37, but it depends on the household and how much you earn.
Exactly. Yeah, exactly.
Okay.
Yep.
I think I didn't understand when he said tax rate. But yeah, so like long term is between 0 to 20. And again, it depends if you're single, you're married, how you're filing. But then short term is between 10 to 37. So that's a huge amount, 37%, if, depending on your bracket, because it all depends on the bracket and your filing status.
Okay, great. Thank you.
Well, you guys know that if you borrow against your portfolio, of course, there's actually, since the market is up, let me explain something that happened to me. So years ago, I had an account in Nexo, and that's a place where they used to pay interest for, not interest, some kind of gain for holding your crypto there. And so I borrowed 50% against my portfolio. Well, the market fell a lot, and they said, you need to top up, you need to top up. So I didn't top off, so they took the loan back. Because I don't know if you guys know, in the crypto space, you can get a loan in a second. It's not like you have to go to this whole thing of banks that takes days or whatever. And a lot of times they don't approve it depending on your credit. With crypto, it's against your portfolio. And so, again, I took 50% so I can make more money. So yes, I lost my portfolio, but I made money anyway. And I was able to basically, I didn't have to pay taxes on that. Right. So it was a twofold benefit. Yeah. Interesting, right?
If you
So
guys
any
ever
other,
hear
go ahead.
if you guys ever hear Robert Kiyosaki, he's really big on this. He's the one that wrote Rich Dad Poor Dad. He's always big about borrowing against, and he will say, the rich don't pay taxes because it's always debt that they're taking out to buy these assets. And that's one of the biggest secrets, pretty much. So the difference between the rich and the poor is that the poor take loan to buy liabilities, things that cost them money, to go on trips, to buy nice clothes, just silly things. While the rich, they're taking the debt to buy more assets, whether that's crypto, gold, real estate, etc. And this is how they're able to generate more money without having to pay taxes. And then within real estate itself, there's a lot of different tricks and things that they can do to stay tax free. And then the other thing is like, and this is something that I heard from the banking industry. One of the things that people were doing in the beginning when Bitcoin was first out is that people were taking their credit cards and buying Bitcoin and then never paying the credit card. And you know that if you become, delinquent on credit cards, after well, they report that as a loss, the company itself. And this is something that people were doing in the beginning. And, you know, um, it again is the whole mentality. You use money to buy assets and then you either pay that loan or some people were actually defaulting on those credit cards.
Mm-hmm. Exactly. Again, I always recommend Robert Kiyosaki's book, Rich Dad Poor Dad, because it changed my life. Because I didn't know anything about this. Robert Kiyosaki talks also about ghost income, which a lot of people don't know about, also known as phantom income, which is income that you haven't received yet, but are still liable for, well, you don't have any, you're not liable for taxes. Investment gains, if, anyway, but again, he focused a lot on what there's good debt, there's bad debt. It is what you do with your money, which makes it good debt or bad debt. You buy assets or you buy liabilities. As long as you buy assets, they appreciate, then it's a good debt or it's a good buy, right? Because even buying with your normal money is, even though you're not using debt, right? Like using credit card to buy crypto as an example of that, right? You got in debt to buy crypto as an example. So any other questions, guys?
I just want to say, do remember that, and none of this is financial advice or tax.
Nope.
Please
No,
consult
exactly.
with your professional advisor or a tax accountant or a CPA. Also, for people that are newer, that are listening to our space here live from Third Academy's Metaverse, um, pay attention to, you know, brokers like Fidelity and Charles Schwab's. Some of them, they do provide amazing customer service and have, advisors at hand that are able to help you. I know Fidelity specifically is expanding the digital assets department, and now they're starting to incorporate Bitcoin and Ethereum, which are crypto assets that you can buy via the platform. There's also For You All, which is another retirement plan that is now offering crypto as a alternative 401k. So these, there's many different resources out there and
Hmm.
that are both educated with the stock market and the crypto market. If you're looking specifically at crypto, I will advise to find an advisor that is specialized in crypto, because a lot of the traditional advisors will not provide you advice when it comes to cryptocurrency.
That's the only problem we had because it's Sonia, right? But does anybody in the audience have any questions in YouTube or anything? Anybody there that we need to answer any questions?
I don't have any
I
more
don't know who's
questions, but much for all that.
okay. Well, by following these tips, you can help to reduce your tax liability and maximize your investment returns. Thank you so much to Third Academy for hosting us in the metaverse today. It was an honor to be here, and we're so grateful for the opportunity to share our podcast with your community. We also want to thank everyone who watched us on YouTube or will watch us on YouTube or any of the social media platforms. We're so glad you can join us, and we hope you enjoyed the episode. Um, Please join us again in the next 2 weeks, every Friday at 11 Eastern Time for another